up, guys? How you doing? Kunal here, Bulls on Wall Street. I hope you guys are having a great start to the new year. And boy, what a shebang we started with here just yesterday on the 3rd. We had some big news coming out about the Trumpster coming after basically a well-known Iranian terrorist and, giving him a little bit of that hot missile heat. And with a full-blown assassination, there has been a lot of commotion that there'll be retaliation, and this could start, a very slippery slope of tit-for-tat retaliations. And the market in the morning was getting smoked. So what I want to do today is talk to you about what could happen next and what do we have to prepare for. Before we get started, want to let you guys know that we have an awesome webinar coming up on Monday, January 6th, 8 p.m. Eastern time. It's going to be on YouTube Live. So go on the Bulls on Wall Street YouTube and you'll see it up there. It's live in 2 days. Set a reminder for it so you get a reminder for it. And I'm going to be spending some time talking to you guys in detail about how to make 2020 your best trading year ever. We're going to go into some strategies and specifically some internal tactics that you guys can do so that this year is the best year of your life and you can hit that ball rolling. So let's talk about markets here. These are all headlines, right? World War III. What is happening? I mean, come on, right? Likely just the beginning, right? And you're just seeing like all these people really throwing off so much drama. And sure, it's never a good thing, right? To go to war or, when there's bombings and things like that, there's never a good thing. That's like never a positive thing. But in general, like what we care about, right, is not necessarily the politics, but what happens with the markets, like what happens with our money. What can we do to safeguard our investments, or is there ways to profit from it? And I think that's the big thing to really think about. So when you think about the markets, what you have to understand about the markets is that the market right now is just in a runaway bull. 2019 has been one of the best trading years I've seen since I had a full head of hair like Bradley Cooper. I mean, if you look here and you just run like a quick 6-month scan on what stocks were up just like the last 6 months, like what just basic ETFs are, I mean, you can see like the NASDAQ gold, like things are just been flying around in a monstrous way. So there's really like been a lot of action. But when you think about markets, what we have to remember is that trends can play a huge part of the markets. But what happens usually is, price action and price trends, if they're strong enough, they will shrug off news. And if they can shrug off news, that gives you confirmation that the market is really, is the real deal, and this bull is ready to continue higher. This bull market that we've had recently has been probably one of the more doubted ones that I've seen for a while. People seem to be, even with the market up like 50% in the last 12 months, people seem to be underperforming. People seem to be a little bit more skeptical, like possibly because of political concerns that they may have or leanings, or just the fact that we're, 10 years into a bull market. But the one thing that we can't ignore is the price action of the markets. And the price action is telling you right now that we've had a breakout going since November, and we've literally been, minus this one day right here, we have not even broke under the 20-day moving average, which is a really short-term moving average. That's telling you that the velocity and strength of the markets is really reaching some peak levels. Like the trend is so strong right now. If you can get a market right up your 9 and 20 EMAs, that's telling you like this is, number one, a swing traders market, which means you want to be holding overnight positions. but also you can be aggressively day trading, to the upside. So if you look at the market, even on Friday, the market gapped down. So when this market gapped down, like the market was up, down like 400 something points, which is like at that point, like when the market opens down that much, most people automatically start thinking, oh my God, I got to sell everything or I got to short everything. And, this could be the day of a crash. But that's not necessarily the case. Like all that can happen is you have to remember like what's happening on your larger picture charts. The market gapped down, but you just ran right into the 9 EMA, which has been acting as support for really quite some time here. So the market gapped down, but it just came right into the 9 EMA. So you know what ended up happening? Boom, like it ends up popping. And what you saw was like tons of stocks just running hot at the open. Like you could see like Tesla, like big push at the open. A couple of stocks like we were looking at here. See this Coop? This is what you want to do when the trend is strong. So like this is like, these are the type of plays that we look for. So what I want to talk to you about is like if the market gaps down in a big trend and you hit some support, what you want to do is look for potential spots of reversal. It doesn't mean that you reverse, but if you see it, you can reverse. So when you see this dotted line here on TC2000, that indicates a red to green line. So when you have a bunch of stocks, like when the market gaps down, all the stocks are going to gap down too. But when you start to break over that dotted line, that tells you that the individual stocks are going red to green, which is a very, very powerful setup. It means that there is no crash happening. If anything, people are buying that damn dip. And so you saw a lot of stocks yesterday go red to green and just go on these big, big monster runs. So, we ended up taking, our first trade of the day, we took a trade on Billy. So Billy was, you can see this. Look at this beautiful chart, guys. Is that not beautiful? That's a beautimous chart right there. Like, woo! I'm into girls, but I like this one too, man. It's amazing. Like, that's a beautimous chart. It's beautiful. It's sexy. It's fantastic. I love this type of look. Why? Number one, it's an IPO stock. Those type of stocks have been really running hard this year. You've got 3 test breakout here. And then it's a Chinese stock, and we've just started announcing like these deals with China and stuff. So we have this kind of political stuff coming in too. That was an overhang on a lot of Chinese names. Like I've been holding a long-term position in this Baidu with the anticipation, right? That when the China news and the tariff war is over, this thing can start to really ramp up. So you're starting to see when that overhang starts to go, a lot of these names can really, really start to pop up. So we took a trade on this Billy, and it's that same strategy. So when the market looked like it was going to crash, see Billy, it closed at 21. It opened at 20.56. So it's down like 50 cents. Now, a lot of times when a stock opens down weak like that, a lot of people say like, oh my gosh, like I got to short it. I've got to short it. Like this is, like the market could roll over today. But oftentimes what happens is when you get a strong trending market, and I always look at the QQQs because tech stocks are usually the best trading stocks. I look at the QQQs. When you get that back gap down and it just comes into support, then you often can get a reversal, especially if that support holds. So what I did on this Billy was, as you got the gap down, as soon as it went red to green, so this dotted line is the red to green spot. So as soon as this breaks over the dotted line, I'm long this thing, and then, we can play the wave on this thing. So I usually like to sell some into the first spike and then hold some for lotto. And I sold out my last shares at like 22, but a very, very simple pattern that you can do on most names that have a really hot chart, and then they gap down and people think like, wow, maybe the trend is over. And then it flips the other way and people get caught off guard. And Coop was like another one, right? That you saw like it just gaps down. Everybody's like, oh, okay, maybe it's going to roll over today. And then boom, it catches you the other way and you get these big trends. And that's a type of trade that we frankly do every single day. So hopefully that helps you guys kind of get an idea of what's happening in the markets. I think the big thing is to really ignore the noise, Could this be World War III? Who knows? I don't know. I'm not in the prediction business. I'm in the day trading business, right? Or short-term trading. So things can happen, but we just don't know, right? Anytime there's something that happens in the world, whether it's China this or Europe this or now Iran this or, whatever it might be, overall, that can add some volatility to the market for a few days. So you definitely want to tighten up. Like, you don't want to be all just gung-ho and loose and going commando on your stocks. You want to tighten up and be smart. You want to be prudent, but you also have to ignore the noise and follow the charts and the price action and let the individual stocks and the actual market indexes tell you what to do, because frankly, most of us are just not trained into reading this type of news and analyzing it and then having the connections to go through all that. That's a whole different ball game of type of stuff. As short-term traders, we're using technical analysis and charts, and that's where our edge is. So our edge is always going to be a little bit tricky. But the one thing I will say is, if you start to see more and more attacks and things like that, and the indexes start to show weakness, then we have to be careful that with the market up so high, it could only take a few things to kind of get it off course, right? So watch and see, if it starts to break under these MAs and then you bounce up and you make a lower high. So say you pull back, break under these MAs, and you bounce up and make a lower high, that could tell you, okay, maybe this market's going to pull back some. And, we have a lot of support here, but frankly, you know what? It wouldn't take much to get a, 5-10% pullback, which would actually be probably pretty healthy. So on a short-term basis, sure, we're going to ignore the noise and we do what we have to do. But on a, just a prudent basis in terms of your investments and your longer-term trades, right? You always keep an eye on the bigger picture of the market, let it guide you, and we make our decisions with, really a lot of risk management, behind us. Guys, I look forward to seeing you guys on YouTube, on the YouTube Live, 8 p.m. Eastern time. And I'm going to get you guys kick-started into the new year. I promise you it's going to be a show. I'll give you guys my all as always. And if you like this video, smash that like button. Make sure to hit the subscribe button. And feel free to leave me any questions, comments, concerns. And, of course, you can always email me to KUNAL@BULLSON.WS. Guys, Happy New Year. I look forward to seeing you guys on Monday. Take care.